Ladies and gentlemen, welcome to another edition of Crypto World Radio. My name is Wabi, and I hope you enjoy this sit down and AMA with Chronosfi and the rest of the team. I want to inform you guys this space is being recorded here on Twitter, and about an hour after that, because we do have more content following this space, it will be uploaded onto our YouTube, and you can check out all of our other recorded spaces content and things like that. And if you're enjoying this crypto specific content from the team, feel free to follow them on their respective handles. And yeah, really excited to have you guys on. And I want to take the time to thank the audience and as well as yourselves for coming up and joining us. You know, over the last couple of weeks, I've enjoyed covering all the sorts of innovations that are going on in Arbitrum. And yeah, eternally grateful and truly an amazing opportunity to have you guys up here. How are you guys doing today?
Yes, thank you for the introduction. We've been doing, for myself, really good. I'm Satsai, one of Chronos co-founders, and I started investing in crypto nearly 2 years ago, full time, since I made money and I thought by studying the crypto markets daily, there could be possibilities to make money. And since then, I, for example, started investing in the Solidly launch when Andre Cronje was posting those Medium articles. I remember I really liked the idea of the V33 model and the game theory behind it. And I've been investing in Solidly and other Solidly forks since then. And we thought there was a problem with them, that it is mercenary capital that is trying to get the emissions and fund and dump them. So we thought there should be a way to implement a new functionality in the B33 model to create something that could give a solution to this mercenary capital. And that's how we got into the maturity LPs. That is like our key innovation, and I think we could talk about it more with when Levy and Unified present themselves, and as we start with the AMA.
All right, Levi, go on ahead, brother. Good to have you up here. Thank you for joining us, and thank you so much for that sweet intro, Kronos. Thank you so much.
Yeah, hey everyone. Hope everyone's doing well. Just quick intro for myself. I've been involved in this space for a number of years, but 2017 was a big entry year for me, and 2020 is when I sort of got more involved in DeFi, and I haven't really been a public figure in a sense that I've been posting and sharing my thoughts until just recently, when I kind of started this account a few months ago, and I really fell in love with the Solidly model with all the forks coming out, particularly Equalizer. Thena is another big one, and yeah, it's sharing my thoughts. I think there's a lot of ways to improve the V33 model, and it's been fun to see all the different implementations and experimentations. And joining the Chronos team here has been really exciting because, as Satsi mentioned, I think the maturity adjusted LP positions are a small but very significant improvement to the model, which improves it, in many ways. But the most important thing is aligning the incentives of the LP with the protocol. And that's really the innovation in the Solidly model, is the alignment of incentives. The tech stack with the stable swap AMM and the volatile AMM being a Uni V2 pool, that in and of itself is already out there. And also concentrated liquidity we're seeing now come to the V33 model. But all those tech stacks can be implemented after. The real revolution here is the incentive alignment. So that's why I'm really excited about Chronos and what we're doing to align our LPs with everybody else in the protocol.
Hey everybody, I'm Unified. I've been full-time in DeFi since about 2020, and I am like a total in it for the tech type person. I think this stuff is super fascinating, and I really believe in my heart of hearts that we are building the future global financial layer for the human race. And so I'm super excited to be involved with Chronos, because I really think that what we are building and some of this technology that we're going to be putting out really is going to represent like the next evolution for decentralized exchanges. And I'm really honored to be a part of it and be moving the space forward.
Awesome, man. Great intro. buddy. Appreciate you guys. So, the question for Chrono, sort of like rapid fire in a sense. So, I'm excited to hear about what you guys are doing and aligning the interests for all participants within Chrono. So, I wanted to know, as far as like the tokens and the LPs are concerned, how is Chronos working to incentivize things like the token holders, LPs, the traders, and protocols to work together within Chronosfi with what you guys are doing?
Yes. So I think as Levi said, the incentives are aligned. I think with our maturity LPs, we are innovating and we are creating something different, something really good. The maturity LP means that liquidity providers will get a boost on their rewards, not meaning that there would be more emissions. Not. It would mean that rewards would be distributed in a different way. The way is there's a boost each epoch of 0.33x till the sixth epoch, and then that means that LPs need to think every epoch if they want to stay providing liquidity in this pool or move on to the next pool that has more bribes, for example. So this way, we believe that mercenary capital isn't like really mercenary, and liquidity is more sticky. So if you want to add anything to this, Unified, I think you could explain better.
Yeah, so essentially, like, for the retail investor, you don't really have to think about liquidity too much most of the time. Like, your experience is just that you go to a DEX and you put in the tokens that you want to trade, and then you trade them. But for the protocols themselves, liquidity is like a super important thing. And it's really difficult for protocols to like figure out how to incentivize liquidity effectively without like breaking the bank. And so, if you're a project that's trying to, get token liquidity on a DEX, there's a lot of things that you have to think about. So you have to think about, well, how am I going to incentivize this? Am I going to use treasury funds? Am I going to use, an inflationary token model? Because, in DeFi and on a decentralized exchange, all of the liquidity is provided by the users. So you need some way to essentially pay the users to do that. And the thing that, all DEXs to a greater or lesser degree, and especially V33 DEXs were designed to do, was to sort of make this a lot more economical for the protocols to incentivize this liquidity. So what we've introduced is this concept of maturity adjusted LPs. So by combining this with the V33 model, we're helping the protocols in several ways. And so first of all, it's cheaper for the protocols to incentivize liquidity on a V33 DEX because instead of the protocols paying for the liquidity directly, the liquidity providers are earning the emissions from the DEX token. So on Kronos, they'll be earning CHR in exchange for providing liquidity. So right there, that's like a huge benefit. The other thing that we're doing is that these guys have mentioned we're doing these maturity adjusted liquidity positions. So what we saw with other V33 DEXs was that, well, the bribes and the emissions and all of this are very effective towards attracting liquidity to the DEX. It turns into this game of musical chairs. And so every epoch, if you're a liquidity provider, the decision that you have to make is very simple. You basically just scan the list of APRs and see which pool is paying the highest APR, and then you provide liquidity for that pool. And then when the epoch switches over, the following epoch, and all those APRs change, you just do the same thing again. And you just move your capital from pool to pool to pool in chase of these higher APRs. And well, that's fine if you're a liquidity provider, because obviously liquidity providers are incentivized to earn the highest return that they can. It's not great if you're a protocol, because if you spent $20,000 on bribes in the previous epoch and you attracted however much liquidity you attracted, only to see that liquidity evaporate 1 week later, it's not a very good use of your money. And so we wanted a way that sort of like dealt with this problem on behalf of the protocols. And we didn't want to make it something that was like going to be detrimental to the user. We wanted to keep this like carrot on a stick, like by offering a positive incentive to get them to do what we wanted them to do. And so the way we've done this is when you provide liquidity on Kronos, you receive your LP tokens like normal. when you stake your LP tokens, the longer you leave them staked, you're going to be earning the CHR emissions. And the longer you leave them staked on a single pool, the greater the rate at which you're going to earn CHR emissions over time. So over time, that's going to scale up. And you're going to earn a 33% boost every week that you leave your LP staked up to 6 weeks. And so now what this becomes is, now that you provide liquidity, your question each time the epoch turns over is a little bit different. Because now let's say that you're in a pool, you've got your position staked, you've earned the boost for a couple of weeks, and now a new pool opens up that has a higher APR. There's nothing stopping you from moving to that other pool. However, by doing so, you're going to lose that extra boost that you've earned over time on your staked position. And so the intent of all this is to try to provide a positive incentive for users to leave liquidity stationary from one epoch to the next. And so we've done this by increasing over time the amount of CHR they're able to earn.
Wow, man, that was very, very impressive, man. Wow. Um, so I wanted to know more about the technical side of things, which you seem very well versed in. So I understand you guys are using somewhat of a zero rebase model. So I wanted to know what are some of the benefits of using the zero rebase model, and how does it encourage high lock rates to prevent the NFT holders from losing their share of votes? And I'm also, by the way, I'm very intrigued, by the way, as well, with the combination of the VAMM and SAMM models in Chronos, and would also love to know how they work together to create a powerful liquidity solution, really, for both volatile and stable assets.
Yeah, so I think Levi should talk on these ones, because we actually met Levi with one of these articles he made about why zero bases are better. So if you can go ahead, Levi.
Yeah, and in the simplest way to explain this, I guess, might be through an example. And it's really to show that rebasing doesn't really have any economical value it's producing. And I think people have discovered that, through the Ohm fork season, that just because you rebase doesn't mean you're actually creating value. And some protocols are using this as an anti-dilution, marketing thing. But when you break down the economics behind it, I think that doesn't really hold. So in the simplest way possible, let's say, for example, we have $100,000 in weekly earnings going to 100,000 VCHR voters. Now, if you rebase, so every VCHR gets $1 in revenue for that week. If you rebase and increase the amount of VCHR by 30%, you now have 130,000 VCHR, all earning 70 cents per epoch on that 100 grand of revenue. So unless your revenue changes, the protocol doesn't earn any more. And everybody, their 1 VCHR turned into 1.3 VCHR, they still earn that $1. It's not like, the revenues increased because they've done the rebase. But what that means is that new VCHR that's on the market is now worth less, because instead of generating $1 of revenue, now it generates 70 cents of revenue, and it would be discounted by 30%. And the issue over the long run is, because you're incentivizing liquidity with CHR emissions, the thing that really spins the flywheel is giving CHR the highest value possible. And if you start diluting that value through rebasing to the existing holders, you start impacting the economics of the flywheel negatively, and your protocol is going to have to generate additional revenue over time to sort of make up for that dilution. So it's a scenario where people who are in early and getting that rebase aren't really benefiting, because it's not increasing the revenue. And in fact, what we're seeing on the secondary markets for protocols that do rebase is their locked position NFTs actually trade further below par value with the liquid token. Because again, you can't, gimmick your way around economics. There's only a set amount of revenue, and changing the denominator on that isn't going to increase that revenue. So that's kind of the simplest way I can explain it, is more tokens don't equal more revenue, but more tokens does impact the economics of the flywheel.
Awesome, man. So if we can, I'd love to get into the NFT side of things. So I understand that the Lost Keys of Kronos NFT collection, it sounds very, very interesting. So if you guys are able to go into detail about stuff like that, such as, how does the NFT collection tie into the Kronos platform? And what exactly the benefits will be in owning a lost key that will bring to the participants of your guys' platform. And thank you, by the way, Levy. That was a pretty sick statement, and how like the traditional V33 model differs for what you guys are doing. Really interesting stuff, brother.
Yeah, so for the NFTs, we actually use like a lot of NFTs in Kronos. And so the first one that you were talking about is the CHR NFT, which is the Lost Keys of Kronos NFT collection. And these are sort of like an ownership stake in the protocol, is kind of how you can think about them. We sold 5,555 of them, and to raise funds that'll be used to, you know, seed the initial liquidity on the DEX and sort of get things running. And then this is also going to be used to pay for internal development and things like audits, this, that, and the other. This was how we bootstrapped all of the money that we needed to launch the project. And so these we've already minted out. We were successful enough. We sold all 5,555 in just under 12 hours, which was really phenomenal. A lot of people were really excited. And by holding these, you get all sorts of benefits. You're entitled to. It'll start at 20%, and then it scales down after 6 months to 10%. But 10% of all swap fees on the DEX for life, just for holding the NFT. If you were one of the original minters of the NFT, then you're entitled to 2% of all royalties anytime an NFT is resold on the secondary market. And if you hold one, then you get 1% of those royalties. And then whether you minted or whether you hold one at the time that we launch and do the snapshot, the NFTs also will entitle you to a portion of the fair launch airdrop, because we're not doing a private token sale, anything like that. We are going to airdrop everyone CHR and VCHR to begin participating in the protocol. And so that's part one. Those are available to purchase now on the secondary market. You can get them on. We had some trouble with OpenSea, unfortunately, but you can find them on Tofu NFT as well as on the When Moon NFT marketplace. And then, so the other ways that we use NFTs in Kronos are, if you're familiar with the V33 model, you know that the V NFTs, by locking your CHR tokens to VCHR to earn the right to vote on the platform's gauges, these also trade on the secondary market. And then the maturity adjusted liquidity positions that we spoke about previously, these are also represented as NFTs. We call these MA NFTs, or maturity adjusted NFTs. And what's really pretty nice about these is that, let's say you have a staked liquidity position and you want to get out of that position. Well, you can sell this NFT that represents your liquidity position over the counter using an NFT marketplace. And so if you do that, if you transfer ownership while it's still staked, then whoever you sell it to will buy that with whatever time boost it's accrued up until that point intact. And so this allows you to sell not only the underlying liquidity position, but also the value of the time that your LP has been staked and accruing this additional emissions boost. And so we expect that these MA NFTs will probably sell at a slight premium over the underlying tokens on the secondary market. Well, actually, you'll earn more by selling it as an NFT than you would by unstaking it and selling the tokens individually. And so this just goes that much further to kind of help make liquidity on Kronos extremely sticky and long lasting. You could conceivably provide liquidity that would never be unstaked and still be able to sell it.
Awesome, man. So speaking as far as liquidity, now that we're on that aspect, it's very interesting to see that you guys have chosen Arbitrum as your launch pad, and I'd really like to know how Arbitrum was chosen to be that specific platform for you guys compared to other L2s like Optimism or Mantra, right? And it would be pretty interesting to know like what you guys see as advantages in building on Arbitrum for you guys at Kronos, and how it's going to help you guys become the liquidity backbone of Arbitrum.
Yes. So we believe in the future of Ethereum and how it escalates into layer 2s and the CK rollups. And on why on Arbitrum is because there were other B33 models that were really big in the other chains that we thought about. For example, Fina from the Binance Smart Chain, they've been doing a great job. We actually contacted with them in the beginning and the start of Kronos. We've been having the help of Apollo. He's one of the founders of Fina, and he's also an advisor for Kronos. And on Velodrome on Optimism there was Velodrome, on Phantom Equalizer, they did a great job too on the launch with the zero-based model. And we wanted to build something in a chain we believe it will have a lot of traction. We also believe that since when we started planning Kronos, there was no token yet. That's something we thought about. If there's ever gonna be one token of Arbitrum, probably this ecosystem will be something really big, and there's still in need a platform and a really a B33 model like us, really innovative. There was no one, so we thought we have a competitive advantage on Arbitrum, and we wanted to build the liquidity layer for Arbitrum and be the liquidity hub for a lot of protocols, and as more protocols on Arbitrum, better. So yeah.
Yeah, to add on that, I think Arbitrum, it's probably, to me anyways, by far the most innovative chain in terms of DeFi projects, like novel DeFi projects with, tons of perp dexes, options dexes, etc. that are coming out. So it's an interesting place to build. It also has very high TVL and volume metrics, which is positive. But that being said, no V33 DEX has stuck here, and we're really big believers in the model. I think every chain will have a dominant solidly DEX that will control liquidity and command it, because personally, I see this as a superior model to Uniswap, to Curve, to all the traditional DEXs out there right now. And I think some of the reasons is, one, there hasn't been a very high quality fork on this chain yet. But two, there's a lot of, especially compared to other chains, it seems like liquidity providers are a little bit more mercenary on Arbitrum. I think there's more professional money managers on this chain who move around and actively manage liquidity positions, chasing the best yields. As opposed to somewhere like Phantom, where it's a smaller ecosystem. There's less players, there's less places to go, which is another factor. On Arbitrum, there's a lot of competing places for your liquidity. For example, there's Uni V3 pools, concentrated liquidity pools. There's GMX. You could stake in GLP if you're a liquidity provider. You can go to the GDI vault on Gains Network. There's a lot of places to put your money, and what's happening in the other dexes is capital is rotating in and out, and as soon as the token price starts going down, there's not really anything to anchor liquidity providers to the protocol, and it creates kind of a negative feedback loop where DEX token falls in price for whatever reason, could be market volatility, then TVL starts pulling out, and as a result, now nobody wants a token. So that's kind of what we're solving for, and I think that'll actually land really well in the Arbitrum ecosystem, just how it is today.
Thank you, man. Thank you so much for that added statement. So I wanted to sort of like rotate the question back and bring some other aspects to what your guys are doing. I'd be really interested to know how the CHR NFT fundraisers work and what the incentives that are in place to be for things like early backers to be, I think of it as like a community VC, and once again, I find you guys to be pretty cool, sort of like this community driven liquidity layer and AMM. So, if you guys can also go into detail, and I know it's sort of like a two-part question, as far as how the community is involved, right? In sort of things like decision-making processes and what role they play to the overall success, really, of ChronosFi.
Yeah, I guess I could touch on this. Obviously, yeah, we're an ecosystem-focused project, and the community is massive for us. Not only our community, but also our partner protocols. And our strategy on the NFT raise was to sort of distribute ownership and contributions far and wide, not just to VCs. So in our private sale rounds, we had a lot of individual contributors who helped us with advisory services, promotion, connections, etc., as well as DAOs. That was kind of our focus. And then the public sale and the whitelist minting went largely to our community. So the distribution is actually pretty good on our NFTs. There was 5,555 minted to 1,900 people. So it's roughly 3 NFTs per person, which gives us, a really decentralized holding base, which is what we're aiming for. And there's a lot of advantages to going through the NFT raise for us. One of them is we didn't want to sell tokens because the whole flywheel operates on, that the CHR token being worth as much as possible. And if we're selling tokens that people are then selling, it kind of hurts the flywheel and is counterproductive. So the NFT raise was kind of a unique way for us to do this. It also allows us to airdrop a large majority of our initial supply to our partner protocols, as well as other, cross-chain collaborations. One we announced today was with Equalizer Exchange on Phantom as a lock bonus. That brings, experienced V33 and DeFi users from another chain to Arbitrum and to Chronos. And also we're going to be airdropping all of our partner projects to get their community support and engagement in the Chronos ecosystem. So we've, all the details on the airdrops are coming, but the NFT raise really allowed us to do this optimally and get as many people as possible into Chronos and just engage the ecosystem at large. So I think our total list for airdrop users right now is counting roughly 16,000 people, which is going to be quite a massive event. Probably won't match up to the Arbitrum token airdrop, but we'll try. And so the NFT holders, what they get is a non-dilutive revenue stream. So they get 20% of all trading fees on the platform for the first 3 months. It goes down to 15% over between month 3 and 6, and then it tapers off at 10% till the end of time. The reason it starts high and tapers down is because as the protocol grows and matures, there'll be more and more revenue coming in. So to kind of balance the economics, that scales down. But the important thing is that revenue stream is non-dilutive. So for every dollar that Chronos earns more, that will all go to the NFT stakers. There's also some other perks. They get royalties off secondary sales. And then minters get another royalty on secondary sales. And then we'll also be looking at how we can actually improve the value of the NFTs moving forward. We've talked internally about an NFT marketplace. We still have to develop the full details on that, but that's potentially another revenue source to the NFT. And then lastly, there is an airdrop allocation to minters and to NFT holders. So we definitely, aim to reward our early contributors as much as possible, and we'll continue to do that moving forward.
Awesome, man. This is a very interesting discussion. I want to open it up to the individuals in the audience. If anybody feels like coming up and asking any questions to the ChronosFi team, feel free to do so. We're now opening up a panel. I've invited Sephi up here, who's added some valuable contributions to more of like these GigaBrain, more like DeFi-centric spaces. And we're reaching like that last quarter of the space. Just to give our producer a break. He's been going back to back all day. But if you don't feel like coming up, just feel free to drop any statements or questions in the comment box to the bottom right here on the spaces. And if you guys are new and are enjoying this content, my name is Wabi. I host these spaces here on Because Bitcoin throughout the week. And at the current moment, we're covering a variety of the innovation side of things on Ethereum Layer 2, specifically on Arbitrum. But we will be moving over to cover some of the optimism stuff. And yeah, and feel free to turn on bell notifications so you can be made aware of when these spaces go live. And also feel free to follow the speakers on the panel. Some very interesting discussions here. Sefi, what's going on, my man? If you have any statements or any questions really for the team, I know you've been into DeFi for a while now, so I want to welcome you up, brother. Good friend of the show and all that jazz. How are you doing today, my man?
Good. My comments aren't specific to the team. I was just going to point out, if anyone hadn't noticed, that like there is just this like groundswell of a very early Doge pump going on, and the reason for this is because Doge NFTs.
Oh gosh.
So a mixture of Doge NFTs by the creator plus Elon sticking the dog logo on Twitter and all this shit. So yeah, just be aware of that. Now, granted, like
Oh boy.
my bags were like I loaded up very heavy like 2 days ago before this happened. So just be aware of that. But like, but yeah, I should be able to buy a house with the money.
This guy, bro.
So I do suspect like a good solid pump from this. Like we're in a true golden cross.
guy,
I
bro.
posted that just a minute ago. It's like a 50-day moving average just crossed the 200 and uptrend. So it was already sort of like ready for that. So I think the timing of this was technically timed so that people that bought the bottom could basically get the pump, sort of. So just be aware this is going on right now. It's just kind of news at the moment. So
yeah, man, that's pretty interesting, man. Thank you for that, brother. Yeah, we can talk about that like probably later on today. But yeah, I brought up one person in the crowd, 0x Stinky.
Either way,
I'm
people are going to get involved with this. Do it early, not late. So like, don't ape in late and fucking buy the top or whatever. That's on
NFA,
you if you
bro.
do that. So all right,
NFA, brother.
Exactly.
0x Stinky, what's going on, my man? How are you feeling, brother? Good to have you up.
Hey,
brother.
hey, man, good. Can you hear me?
Yeah, you're doing fine, man. You're doing fine. What's going on, brother?
Cool. Yeah, I was going to ask the team. They mentioned the tech stacks are easy to add in afterwards, and they briefly mentioned Uni V3 type liquidity. So I was just wanting to have them elaborate on that. Like, how much time or how much effort would it take to add things like, V3 liquidity or perhaps like the balancer style liquidity? Like, is that possible? Or is it limited after they've launched? Yeah,
I can maybe speak to this one. So the concentrated liquidity, I think we're already seeing implementations on Athena right now, which is something we're closely monitoring to see how that goes, what success they have, what lessons learned. And that's kind of, a little bit of an advantage being late out of the gate here with our fork is we've been able to observe what everyone else is doing and sort of, take the best, leave the worst, and come up with the optimal model. And so we're closely monitoring what Athena's doing. I think implementation of concentrated liquidity, would be a matter of, weeks, not, many months, once we're launched and running. So it is something we're closely looking at. I could speak a little bit to the balancer pools. Right now, the TVL on Arbitrum for balancer pools is around 80 million. Or 60 to 80 million last time I looked at it. So the addressable market there is quite small. I think Uni V3 concentrated positions are about 300 million. And then the volatile AMM and stable AMM is in the billions. So in terms of our priority ranking, it's going to be that, I guess, Uni V2 volatile AMM pool and the stable swap pool. That's the total or largest total addressable market for us. And then the second one's concentrated liquidity. We are looking at, balancer pools as well, but it's just a lower priority. I think there's a smaller market for those, and they're typically a little less capital efficient to the DEX itself. So it'll generate slightly less trade fee revenues. Another interesting thing we're looking at is Trader Joe style liquidity book pools. So yeah, we have an eye on all these things. First priority is launching with the two pools that we have built in, and then from there we'll look at whatever option works best. We'll be implementing.
that answers it. Thanks for that, Matt.
All right, next up we have Voids. Voids, thank you so much for taking the time to come on up, bro. What's going on, brother? How you feeling?
Doing well. Thank you very much for having me up on stage. I wanted to ask in particular, and to add on to that, I really appreciate seeing collaborations with other dexes like Equal. I think there's more opportunity in a space that is still so small to have those types of collaborations rather than compete, even when you're talking cross-chain. When on that type of mindset, do you see any other sides of things that you could maybe work with other solidly dexes that are positioning in the ecosystem long term versus then trying to steal each other's market share in a way?
It's an interesting question. I mean, if you're asking me about our position versus Solid Leaf Works on Arbitrum, obviously we're here to dominate that market. I do think, there's room for multiple players, and the reason is because these dexes are really ecosystem based. It depends on what partner protocols you have. It depends on their stake in the protocol. One of the things that we've observed that anchors protocols to Curve, for example, is their accumulation of a heavy CRV position. And once there's an investment on a protocol side to build liquidity in a location, as well as build holdings in their vote escrow model, is that tends to be really sticky. And so I think there might be room for more than one, depending on what protocols and partners we each serve. But I do think there will be a dominant one, and I think that'll be Kronos. When it comes to cross-chain, I think for that same reason, we're not in competition with cross-chain dexes, Solid Leaf Works. And we're really open to collaborating with everyone. And I think one of the big issues for us in this model is actually educating users. It is a pretty complex system at sort of the bleeding edge of DeFi. When you look at the mechanisms behind the vote escrow positions and the NFTs and voting and bribing. Now we're introducing maturity adjusted LP positions, which is another learning curve. So there's a lot going on, and not a lot of users in the ecosystem and the DeFi space altogether even understand the model and understand why it's different than an inflationary fruit farm. So I think collaborating with other players and working together to educate the user base is a win for everyone.
Absolutely. And I think it'll go to show long term, the more you can automate those types of tasks and position, the easier it will get for a larger user base adoption. But I appreciate you answering my question and having me up here to talk.
Voids, I want to take the time to say, thanks for coming up, man. I see on your bio that you're the co-founder of Arium, and that's a protocol that I've used in the past, man. Man, I really enjoy what you guys do, man. So if you're ever interested in being hosted on my platform here, because Bitcoin, for these crypto-specific spaces to interact with other devs, founders from protocols built on either mainnet Ethereum or ETH2s, feel free to do so, brother. We'll be hosting more of these Arbitrum teams and coming up soon, some Optimism teams. So if you're interested in that, brother, feel free to give me a DM, man. Would love to have you guys. Man, feel free. But Levy, I wanted to follow.
I can't hear you well.
Sorry.
Yeah.
So following up on what you were saying about the maturity adjusted LPs. So I wanted to know, how exactly does that encourage sticky liquidity, and how does that help prevent like the correlations between things like price volatility and also things like TVL?
Yeah, definitely. So there's some interesting game theory that this introduces to liquidity providers now. One of them being, there's an advantage to being early to a pool, because if you're the first in the pool and you're ahead of that maturity curve, you're going to enjoy additional rewards pretty much until your max maturity, 6 weeks. And then until other liquidity providers in that pool catch up to you on their maturity curve. So that's an interesting game theory where a new pool being launched on our platform, I think, will induce some FOMO into liquidity providers where they want to be first, and that'll help build up deeper liquidity, like right off the hop for a protocol. Because something that is another challenge, is getting the liquidity pools kind of flywheeling and kickstarted. So a protocol might come to Kronos, but they have to bribe small, or another, solidly fork. They have to bribe small in the first few weeks to kind of build up that liquidity. Whereas in this case, their bribes could be more effective in sourcing that deep liquidity in a faster way. So that's kind of one. The second one is, now that we're introducing the maturity adjusted positions, there's a second sort of revenue stream to the LPs, which is they have capital appreciation on their position when selling through a secondary market, because there's actually a dollar value to that premium position they have, to the mature position they have, that they can realize through capital gains. So that kind of gives two revenue sources to LPs. One is they're getting emissions the whole time they're staked, and the second is their whole position is actually growing in value while they're staked with us. So I think we're yet to see how significant that'll be, what that premium for a mature position is going to be. But I think that's an important consideration, is now LPs have a way to benefit, or a second way to benefit. And when that NFT is sold on a secondary market to somebody else, we don't lose liquidity, right? That stays on the protocol. And so what we want is, we want LPs that have come in and put an NFT, we want that TVL like permanently locked in Kronos and maybe traded on the secondary market, instead of people pulling out their liquidity and taking it somewhere else. And then on the correlation between TVL and price, I touched on that earlier. Whenever the DEX token price starts falling for whatever reason, we notice TVL pulling out about 2 days after, like 1 to 2 days after the price falls, is typically what I've observed. We released a case study on our Medium, so anyone's welcome to read that. But it seems like, price starts falling, and about a day or two later, LPs look at their position and they're like, hey, I was earning 100% APY, now it's 50% APY. I'm going to pull my liquidity and go somewhere else. And this kind of creates the negative feedback loop where price is falling, TVL is leaving, and it's hard for that price to find a floor, because people are not certain, whether that TVL is going to come back, whether it's going to stabilize. And it's not until the TVL stabilized for about 4 days that, it kind of found a floor there, and then buying and buyers returned to, support the price of the token and resume the flywheel. So what we're hoping is our sticky liquidity will kind of push that 2-day timeline out. I don't know yet what it'll be, but hopefully LP providers on Kronos will be more tolerant of swings in APY, just because they don't want to lose that premium boosted position. And that'll help sustain the price of CHR, because the revenues will be more consistent to voters as well.
Do you guys have any plans to integrate with some more things on Ethereum, like the ZK Sync ecosystem and things like that? I know they just went live on their mainnet recently, and we're going to be hosting that team on Wednesday. So would love to know if you guys are thinking about implementing on that layer as well.
Yes, sure. About that, well, we think there's a lot of work that we need to do here in Arbitrum yet. So we're not planning to launch in any other chain as for now. So we're trying to build the liquidity layer on Arbitrum, implement all of the innovations that we are building. Is something that takes a lot of work. For example, these last few days, we've been working very hard on how to implement those maturity LPs as MANFTs in our decks in a simple and easy way for people, as Levi said, to actually know what they are doing with this, because it's something different that really haven't seen a lot before. I see Beethoven X has a good UX UI with this, but for example, splitting, merging this type of NFTs is something that isn't really easy to show to investors. So we are trying to build, as Levi said, the NFT marketplace is something we are actually focusing on too. It may be a good way to have more revenues for CHR NFT holders, but the main reason is we want to have the best user experience that we could make, so that all people can understand what they are doing and what they are investing on. So that's what we've been focusing these last few days, and really working hard. We've added a couple of people to the team, and we've been doing like really a lot of work in this. So yeah, not really planning to launch yet in any other chain. We are focusing on Arbitrum, and we are focusing on building something great.
Yeah, just to add to this a little bit too, is that, if this is successful, and we think it will be, then these MA NFTs are going to be like almost a new primitive, like a new thing for other protocols to like build things on top of. And so we're working with our launch partners already. We're like putting the word out and just kind of like coming up with ideas. For example, like a lending protocol that's specifically designed to use these liquidity positions uh, as collateral to take out loans. And so what you would have with that is it's essentially something like a self-paying loan, because your collateral would be generating revenue that could be automatically used to pay off your loan over time. And so we think that like if we're successful, and there's a lot of these and it's popular, then the incentive for other protocols to build this sort of second layer functionality on top of Kronos is really clear, because there's going to be like an easy way for them to profit by bringing these products to market. And so over the long term, as this gets more understood, we could see this being like something that leads to the whole next generation of DeFi protocols that are specifically designed to take advantage of these like yield-bearing NFTs.
Awesome, man. So I guess since we're wrapping up now, where can people connect with you guys, and how are other people able to contribute to what you guys are building on ChronosFi? And if you want to mention some things that are up and coming for Q3 or Q4, I mean my bad, Q2 or Q3, feel free to do so, man. Great having you guys up here, and once again, shout out to the ChronosFi team. Feel free to follow them and Unified and Levy, and also some of the people that came up to talk some shop and give some of their statements and questions. We have Voids, the co-founder of Arium Phi, and we also have Zero X Stinky.
Yeah, thank you for hosting us. It's been really great. We really liked being here with you guys, with everyone. Yeah, so if you want to know more about us, you can click on my picture here on Kronos, get to the link tree, and see Medium, the articles explaining everything in a more detailed way. If you have any question, you can come to our Discord, and you can join us. And for next steps, as I said, we're actually focusing on creating the best UX. So also we've been talking for the auditors, and we plan to launch in about 10 days or 2 weeks. So yes, any announcements will be made in our Discord and in our Twitter. So feel free to come and join us and ask any question and help create something good.
I'm gonna plug our airdrop in here as well. We're running, probably one of the largest airdrops that has been done on Arbitrum. We're giving away 53% of our initial supply, and there's lots of different avenues to get that, whether it's through partner projects, whether it's through our internal programs and promotions, our NFTs, programs like Equalizer. There's lots of opportunities. So I encourage everybody to at least check it out, because you might qualify for an airdrop, and who doesn't love that? We'll be releasing all the details on the airdrop this week.
Awesome. Sweet, bro. Everyone loves airdrops. Same thing with myself, man. I actually used a portion of my airdrop to have a nice little weekend getaway over by the beaches here in sunny South Florida, brother. So, yeah, if anyone here on the panel has any last statements to give, feel free to do so. And once again, if anyone in the crowd is new here and you're enjoying these conversations, feel free to give us a follow here, because Bitcoin. I host these spaces throughout the week, and sometimes magic happens, where you'll find other co-founders from other protocols connecting with our guests of the day, right? That happened last Saturday with some of the folks from Bear Chain and other projects building on Tendermint. So, yeah, if anyone here has any suggestions on who we should host and things like that, feel free to shoot me a DM and I'll make the magic happen. But outside of that, you'll be able to catch a replay of the space up on our YouTube channel and also for a while here recorded via Twitter. So shout out to the audience for supporting us here. Thank you all so much more over and over again, man. Truly a blessed opportunity. And yeah, I look forward to what you guys on Kronos are building. And shout out once again to Voids. Hopefully we can get Arium Phi on as well. And Levi Unified, shout out to you, Chads, as well for being so articulate in all your answers and statements and things like that regarding what you guys are building, and even more in general on the broader aspect of more of the complex DeFi topics, right? Where it takes an extreme amount of curation to concisely explain that to your everyday crypto user, right? And I think that's one thing that is going to really stick out over the next couple of years, man. So I wish you guys all the best. For all the listeners in the audience, wish you guys the best. Hopefully you have a good rest of your day, your week. And yeah, we'll see you guys on Wednesday. We'll be hosting Derivatives Ape and the team over from ZK Casino. We'll be doing a deep dive to all things ZK and stuff like that. That'll be Wednesday at 2 p.m. Eastern time. And we'll be having our friend, Holder of the Fire, Michael, and also a few of our friends over from the Tier 7 network. So look forward to that. And if you want to take a replay of the space, it'll be up on our YouTube, as I stated a few times before. But anyways, guys, God bless you all. Take care. Stay safe. And see you on the next show this Wednesday. Bye-bye.
Thank you so much for having us, King Wabi. We really appreciate it. Thanks, man.
No doubt, man. No doubt. No doubt. Appreciate you, Chads. Later, man.
Thank you. Bye.